Let's welcome in Aswath Damodaran. He is NYU professor of finance. It's good to see you. I guess it's taken a long time to put a toe back in the water, hadn't it?
Well, it had a long run, which is a really great one of the best runs of all time. So it was coming back from an all-time high in 2021. So I think that being on the sidelines was warranted. And I think it's taken about 12, 16, 18 months for it to come back. But this is just a very small experiment, a $2.3 billion IPO. I'll be watching to see what's happening in the next few months to see if it's really back.
So we have this debate now every day, whether this is a legitimate bull market, whether the bulls are really back in charge. When you look at the valuation of this market relative to where the economy is and interest rates, what do you come to the conclusion of? Do you think the market's fairly priced? Is it too expensive or not?
At the start of this year, when I looked at the S&P 500, I put in a range of about 4,300 to 4,400 if the economy did not go into recession and inflation was benign. And in many ways, the market seems to be pricing in that scenario. The problem with pricing in that scenario is you have now plenty of room for the downside. If you get an unexpected surprise on either one, inflation stays high or the economy actually goes into recession, I think the market has some weak spots. But by itself, I can live with the 4,300 S&P 500 given where we are today with the economy and inflation.
Yeah. You couldn't live, though, with Nvidia, where the valuation had gotten stretched to the point where you sold it. You said at the time, quote, it was pushing the absolute limit of what sustainable value is. That's an interesting quote to make about a stock that has always traded at an extremely lofty valuation, no?
No, that's absolutely true. The same thing can be said for Tesla, which is these are stocks that have always been priced, not valued. That doesn't mean that somebody who cares about value cannot hold them. I've held Nvidia now for 5 years, and I'm happy that I did. But at $400 per share, I actually backed out what you would need to justify that price. And Nvidia would basically have to decimate or dominate the entire AI market for it to be justifying this price. And I'm not willing to take that bet. There's too little upside left when you price that in.
The stock, though, was cheaper the day after earnings than it was before because of that unbelievable revenue projection that the company came out with.
AI has been this buzzword that pushes every company forward. The two companies that have really something material to show for it are Microsoft and Nvidia, and both have benefited, and Nvidia in particular. So the story makes sense. The pricing doesn't.
I'm wondering how you're thinking then about, just AI stocks in general. As we call you the dean of valuation, and people look to you as the arbiter of what a fair valuation at times is. I'm wondering if you're thinking about valuation as a whole differently today than you have in the past, if you're forcing yourself to be more open to thinking about higher valuations than you otherwise would, because how do you value the impossible to know? And in a sense, that's what AI is.
The minute you pay a price, you are valuing it. The question is whether you want to value it explicitly or implicitly. So when somebody says, I'm not willing to value AI, but I'm going to buy Nvidia, whether you like it or not, you're buying into the Nvidia valuation. So I'd rather make my best estimates and be hopelessly wrong than not make estimates at all. And AI is changing the conversation, and I think it has the potential, unlike, the cloud or the metaverse, where I felt I could not quite see the magnitude of the business that came out of both words. With AI, I can see changes that could be pretty dramatic to the way we live and work. And those changes always have valuation consequences.